What's up, guys? Welcome back to my channel. Hope you're having a great day. If you're new here, make sure to check out the links in the top comment of the video. I'm going to pin a link to my podcast called Michael on the Mic, a link to getting 4 free stocks when you download the Webull investing app, and a link to join our private investing community where I tell you what stocks I buy and sell in real time. So anyways, today we're going to talk about a company that just IPO'd. We're going to talk about Coupang. I'm probably saying it wrong. I know you guys are going to get upset. You always do. But doing my best here. That's what I think it's called, Coupang. So South Korean e-commerce giant Coupang just had its IPO and has an $84 billion market cap. It soared in its first day of trading, and at one point it reached about $100 billion market cap. We're going to go over exactly what I like about this company, the potential it has, and we're also going to compare it to other companies in this e-commerce space, such as like Amazon and Alibaba and JD.com. So right now, this company was founded in 2010, and it is, think of it like the Amazon of South Korea. It is an e-commerce platform in South Korea. They did $12 billion in revenue last year, and they're projecting a lot of growth to continue to happen over the next couple of years. Currently, the stock price is sitting right around $51 per share, and Coupang is the stock ticker symbol. For those of you who don't know of it, the stock ticker symbol is CPNG. But right now, this company has a lot of potential, and I do like them, but I think right now, in my opinion, it may be too early to invest in it just because of all the volatility we're seeing. I don't want to have that much volatility in my portfolio, that much risk. But when looking at them right now, you can compare them to companies like Amazon, Alibaba, JD.com, eBay, Mercari, and a couple other companies. So when you compare them to those other companies, right now, Coupang has generated the highest sales growth out of all of those competitors in the past year. So in terms of growth, their sales have increased 90.8% year over year in 2020. In comparison, all of those competitors that I just mentioned, Amazon, Alibaba, JD.com, that list of them, their sales increased by 36.9%. So Coupang grew almost 100%. The competitors grew about 37%. In addition to this, Coupang's strong sales, it shows how they have a really strong ability to take away market share in South Korea from e-commerce providers and from brick and mortar retailers. Consumers are obviously enjoying the platform and are comfortable ordering stuff online through them. In addition to this, gross profit and gross margin for Coupang were on the lower end. It's at 16.6%, which is one of the lowest out of those comparable companies I spoke about. But either way, they are growing very rapidly in a fast-growing market. But at a $85 billion market cap, in my opinion, I think there's a couple better opportunities out there, comparable companies in the e-commerce space in other countries. So Coupang is the Amazon of South Korea. But in my opinion, I really like JD.com. I think JD.com has a much more fair valuation because Coupang did $12 billion. See, it says $12 billion in revenue last year. JD.com, and has an $84 billion valuation. JD.com, on the other hand, has their revenue was $114 billion. It was 10 times larger, 10 times more revenue than Coupang, yet its market cap right now, its market cap is $139.7 billion. So JD.com has $140 billion market cap, does $114 billion in revenue. Coupang does $12 billion in revenue and has about an $85 billion market cap. So if you're just looking at that comparison right there, JD.com, in my opinion, looks extremely undervalued versus Coupang or Alibaba or all the other companies. I'm not saying I don't like Coupang and their IPO. I'm just saying right now it's going to be too volatile with everything going on in the market. We're probably going to see big ups, big downs. It could go down 20% easily in a day. It could go 20% up. The thing is if you're looking at their revenue, their growth, JD.com, in my opinion, is much, much better price. It's a much better buy and has a good value right now. $114 billion in revenue, $140 billion market cap. It's almost a 1-to-1 in terms of revenue and market cap. And also, if you're looking at Alibaba, same sort of thing. Alibaba generated close to $80 billion in revenue in 2020, and their market cap is sitting right around $650 billion. So out of all three of these, I think JD.com has the best value. Coupang, it's going to have a lot of hype around it because it just IPO'd. It's the Amazon of South Korea. I do like it, but there's just a lot going on right now in the market, a lot of volatility, and could easily drop 20%, 30% in a day very easily. And I don't know if I want to invest in that right at this moment. So I do like the company. I like the industry they're in. They're growing rapidly. But if you're going to compare, if you had to pick, let's say Coupang, JD.com, Amazon, or Alibaba, I'd probably pick JD.com right now. So let me know what you guys think. But I hope you guys enjoyed today's episode. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.